Hello, it's Adil bringing you a review of the FTSE 100 for Monday's trading, the 6th of October 2014. Okay, so bringing you my opinion from an intermarket analysis perspective. Okay, so basically, according to the fundamentals, going into next week, will be tapering concerns given the stronger jobs data. Obviously, post Mr. Hilson and Raff article is out, and his article indicates that there's going to be early rate hikes on the table. If that's the case, then obviously tapering concerns, lack of QE, lack of Kool-Aid, and that certainly remains a concern. There's an article by Mr. A. Leidy, basically, who states that everybody was focused on the disappointment regarding Draghi. So obviously Draghi is one incident where there's a lack of QE. So lack of QE from US, i.e. tapering concerns and interest rates being hiked. Then we have lack of QE from the BOJ, which Mr. Hiladi indicates that they are very flexible on extending the time span for, or the time frame for their 2% inflation target to be hit. So that obviously indicates that there's going to be a stronger yen. Stronger yen, as we all know, hurts the Nikkei, hurts Asia markets, which will obviously feed through to the US and European markets. We also already know also with regards to Draghi, his failure to deliver on the QE bazooka that everybody was expecting, and that obviously is a concern as well, and that sent the stock markets into a tailspin on Thursday. Okay, so that certainly is a concern as well. Okay, so that's their three concerns, and then I'll add in the fact that we have weaker UK data. So obviously the data today that came out the UK was very weak. So services PMI slips in September. The article here from Reuters, rapid growth in Britain's services sector eased slightly in September, and broader measure of private sector expansion fell to a 6-month low. Okay, so weaker data there. Weaker data in the Eurozone today as well, as we all know. Weaker data in the Eurozone, and obviously without any QE, that certainly doesn't bode well. Adding the fact that obviously the tapering concerns as well. We've got Hong Kong protests that's still ongoing, and that certainly remains a concern as well. Okay, so certainly a lot of headwinds. Okay, so the overall theme is lack of QE or lack of central bank support. Can the stock markets remain obviously alive without the live support machine? And the answer is no. Okay, so that certainly doesn't bode well. Adding the fact that obviously China is slowing, and risk FX, so i.e. Aussie and Kiwi have certainly been under immense pressure, and indicating further weakness for equity markets going into next week. Okay, so that's basically the overall recurring theme then. From a fundamental perspective, let's have a look at the technical picture. Okay, so technical picture with regards to the US markets, I've already explained, is into resistance. So that generally means, based on intermarket analysis, that the FTSE will certainly be into resistance as well. Okay, so what can we see here? This is a daily chart of the FTSE itself. We've got a bearish inside bar, so therefore expecting certainly a move lower. Okay, weekly chart obviously has broken this key trend line, so therefore remains lower, and the door is open for 6420 and obviously 6300, potentially the 200 MA down here. So all these are possibilities now. Every single one of those are possibilities. In the meantime, like I said, 6420 and 6300 certainly remains open. Okay. With regards to the FTSE, like I said, is a bear flag, bearish inside bar consolidation. So, and we've got a pending death cross where the 50 MA goes below the 200 MA. The momentum remains on the downside. The FTSE 250, we had a bullish engulfing candle, but can that last? That's the quick question. Okay, so we've got this previous support equals resistance situation here, and obviously the move next we're looking at is going to be potentially lower here, down to this level here around the 14,600 level, given the fact that we're in lower lows and lower highs, and we remain in a bearish momentum. Okay, so certainly watch out for that. Only thing that's going for the FTSE at the moment is the sterling. Sterling certainly fell quite substantially, and that obviously can help exports. That explains the FTSE 250 rally. But my main concern is that the fact that the FTSE AIM, which is obviously the small caps, etc., with regards to the FTSE, failed to rally. I mean, that is a poxy rally there. Inside bar doji candle. Okay, so that indicates further weakness, and as we all know, the support level below it's certainly non-existent at this juncture. So that certainly doesn't bode well for the FTSE. I would have expected, if I had a bullish engulfing candle here, then I'd certainly add credence to the FTSE reversal. But for now, certainly doesn't look like it's the case at present. Okay, again, I need more evidence. So that's basically the technical juncture from a daily chart perspective. Let's have a look at smaller time frames now and see if we can see exactly where this is going. Okay, so this is a 10-minute chart of the actual FTSE 100. We have a bullish channel here, obviously upper channel active resistance, key trend line resistance here. We have an unfilled gap below, so again, whenever an unfilled gap below is left behind, the market's always vulnerable to it closing before it potentially moves any higher. So from my perspective, going into the day, we have this HNS formation, which we've not made a higher high since, so potential lower high here for the right shoulder, and then obviously downside target will be 6515. Okay, sorry, 6485, and obviously watch out for the 6445 gap fill to potentially close as well. So watch out for those levels. Okay, with regards to that. Okay, so obviously you got this potential support, which is a pivot low of the day, and that is around the 6480 level. So that certainly will look to hold. Obviously, if that gives, then watch out for that 6445 level. Okay, but for now, certainly nice healthy resistance. We may well, I mean, looking at it from a hypothetical scenario, I mean, this may well be an inverted head and shoulders where you've got the head here. Obviously, we sell off now. Obviously, create this right shoulder, then obviously potentially bounce higher. So that's hypothetically speaking, but for now, let's just look at exactly what's happening right now. Okay, so you can more clearly seen on the 60-minute chart, the inverted head and shoulders formation, as you can see there. So look for a potential right shoulder to be put in, and we'll see exactly how this transpires. Obviously, a breakout on the highs then, and we could potentially test the 6600 level. Again, these are all hypothetical scenarios, but for now, horizontal resistance 6440 level will hold, and we're looking for downside 6540 level. Sorry, and we're looking for downside momentum 6500, 6485. Obviously, elaborating on the HNS formation, the 10-minute chart. Okay, so watch out for that pattern. That's the most important pattern that I think will be relevant. Okay, so watch out for the resistance at the pivot high there, 6545 and 6540, which is previous support equals resistance. So that's certainly the situation there. Break of that bullish channel, and down we go. Okay, so I think that's it in a nutshell, folks. Actually, one more thing, and I forgot to do this last time, is looking at the actual individual sectors. Okay, so looking at a 60-minute chart here, you can see that the miners are in lower lows, lower highs. This certainly doesn't bode well, okay, for the FTSE 100, given the fact that this continues to make lower lows and lower highs. We're in a bear trend. I can't see any support there at all. Daily chart, again, just remains within a downtrend. So the miners certainly are into a lot of trouble, and that explains the reason why the Aussie and the Kiwi have been absolutely hammered, given the fact that the dollar keeps rising. That certainly isn't helping commodities. So expect a continuation of the downtrend with regards to the miners. So obviously that doesn't bode well for the FTSE come Monday. The pharmaceutical sector is into resistance now. We're into this horizontal resistance around this region here and here. So again, a hell of a lot of resistance. That gap certainly hasn't closed with regards to the pharmaceutical sector. So watch out for that from that perspective. Ever since the tax inversion laws in America, remember? Okay, that hit the pharmaceutical sector or the pharmaceutical index or pharmaceutical companies, obviously in terms of their earnings, etc., etc. That certainly still remains the case, and that will certainly weigh on the pharmaceuticals. If that's the case, then expect the FTSE to certainly come under pressure come Monday. Okay, the banking sector. Okay, banking sector certainly has made a slight little comeback. Okay, nothing major. Okay, that's left an unfilled gap behind, so watch out for that. On the daily chart, let's have a look. Okay, still remains within a downtrend, HNS formation, just a dead cat bounce from that perspective, and it certainly has put an intraday double top in there into horizontal resistance as well. Okay, so banking stocks are into resistance. Oil sector certainly remains dull. Okay, nothing there at all. Lower lows, lower highs, no real pivot, and given the fact that we had a bearish engulfing candle to close the day, certainly doesn't bode well. 10-minute chart, obviously we've got an unfilled gap below, certainly needs to close. Okay, daily chart, obviously that doesn't bode well, given the fact that it's an inside bar doji. Lower lows, lower highs continue and will remain. Retail sector certainly has had a dead cat bounce again, given the fact that the situation with regard to Tesco, Sainsbury's, next, etc. All those factors at play. So previous support equals resistance, and that's exactly where we found resistance, and down we go. Use your Fibonacci tool, take it from the pivot high, take it to the pivot low, bang into 61.75% resistance, and down we go. Certainly doesn't bode well. Okay, into the 200 MA, down we go. Daily chart, you can have a look. Certainly remains weak. Nothing really of any importance there, just a dead cat bounce. Okay, so certainly doesn't bode well for those sectors that I've just mentioned. Only one left now is the building and construction, so that tends to be key, and that's basically the only sector that we can see, and that certainly is into a double bottom there, but again it's lower lows, lower highs, innocent until proven guilty, therefore the market still remains obviously unfilled gap below. We certainly need to close that gap before I make any decisions. So overall, building, retail, miners, oil, banks, everything remains weak. Okay, all into resistance, which again confirms my opinion that the FTSE 100 certainly wants to continue its move lower. Okay, that's risk on, risk off, wax on, wax off. Safe trading. Goodbye.